Hi, everyone. I'm Brien Lundin of Gold Newsletter, and I'm speaking to you from the Metals Investor Forum in Toronto right before the big PDAC mining conference. It's a great market, a lot of excited investors, a lot of smiles on their faces, and they're all looking for bargains in this red hot mining and metals market. And they're not that easy to find, but one of the key features of this market is that it's inefficient. It bypasses companies, sometimes leaves them temporarily behind. And if you do your homework, if you watch this video, you're going to find some of these bargains that have been left behind by the market. One of the preeminent ones and obvious ones to anyone who looks at it is Cassiar Gold right now. I'm speaking of Marco Roque, who is the president, CEO, and a director of Cassiar. Marco, I've been a shareholder for a long time, relatively long time, about only as long as the company's been in existence, I think. And I was originally attracted to the company because you had a resource of well over 1 million ounces at great grades in a huge land position with lots more to come and a lot of other aspects to it. And here you are, and you have a market cap that does not begin to reflect what you have. Tell our audience what you've got, and then we're going to dig into the details.
Yeah, absolutely. So Cassiar Gold, we have a full district scale land package.
Yeah.
In North British Columbia. It's just under 60,000 hectares at
Yeah.
600 square kilometers, with 5 fast-producing mines. And because of that, we have a wealth of infrastructure. We have Highway 37 bisecting our property. We have power and water. We have mine permits. We have a fully owned and permitted mill. We have 25 kilometers of underground workings, 160 kilometers of mining roads. We have a growing resource that now sits at 2.3 million ounces combined,
Yeah.
at 1.01 grams per ton, combined resource grade, starting at surface with 90% of the ounces within 150 meters from surface, only constrained by drilling. We see that potential on the bulk tonnage to getting to 5 million ounces, and we have potential for a lot more. We see that as a kind of development opportunity that can be developed in about 5 years as we continue to expand and infill and take it through the economic studies, etc. And we also have a quite unique, connected to the bulk tonnage targets that we have at Cassiar North. We have the Cassiar South area where we have these fast-producing high-grade veins.
Very high grade.
Yeah. 10 to 20 grams per ton, 3-meter wide veins, all of them open, for which the mill is specifically well designed for where the underground workings are very valuable. And also within a mine permit, we also have a mine permit covering part of the Taurus deposit.
It really is amazing. I've had a number of people after our presentation today, even some of the other companies on the panel, come up to me and say, Cassiar, that's amazing. What a bargain. And it really is. And I think, as you and I have discussed why the market has kind of overlooked it, I think they've looked at the resource expansion, and you're already so large, and you're expanding it, and every drill program keeps expanding it. But they're not getting excited about that story. And one of the things you're bringing to the market, I've noticed recently, is the potential for fairly near-term production because of the mining permits, because you've got a past producing project of 10 to 20 grams per ton there. What are you seeing now, and why are you emphasizing that more and more?
Well, I think, one of the big changes that, interestingly, I don't see reflected neither, to a much more extent, yes, you see that reflected, or to a certain extent, in the big producers, but to a much lesser extent in the explorers and developers, which is the gold price. We're past $5,000 an ounce, and with these kind of prices right now, the margins are massive for all the projects. And with this gold price, basically late last year, the board gave me orders to, we have these high-grade veins, we have this infrastructure, let's get going on
Yeah.
this high grade strategy and get the fastest possible to cash flow, because these margins now give us a lot of safety
Yeah.
and a lot of room to, the mining plans always, never go according to plan. Always, it could be most of the times over budget, or there's some mistakes done, and now these margins allow us to
You
be
have
very
thousands of dollars per ounce in margin where you can afford to make mistakes
Exactly.
and still have margins like have never been seen in the mining industry.
Exactly. So because of that, it's, we feel historically, or the last 3 years more precisely, we feel that every drill or meter drill on a bulk tonnage, we can add more ounces because we're hitting ounces from surface on a bulk tonnage.
Yeah.
Although it's lower grade, it's 1 gram to 1.5 grams from surface, which are great
These
grades
are
for
really
open-
good grades. So,
for
yeah.
open pit. But we can now leverage the mine permit we have in the south, the fully owned and permitted mill, which is in good condition. And looking internally at those, historically those veins are produced between 10 and 20 grams per ton. With the mill that we have, which is 300 ton per day, if you're putting 20 gram per ton on a 300 ton per day mill, that could mean a yearly production of 60,000 ounces. At 10 grams, that's 30,000 ounces a year. At $1,500 gold, that would be a little bit marginal.
Yeah.
At over 5,000, the top line is a lot bigger.
You never have to finance it. Yeah.
Exactly. So it's a very attractive way to, basically access to cash flow in the much nearer term.
Yeah.
We see the potential to re-permit the current permits and potentially being able to cash flow from there within the 2 years. We're also looking at other ideas like direct ship ore, which some companies in BC are also pursuing very, very successfully. And that path to cash flow, I think, is exciting investors a lot. And so does our board. That doesn't mean we're completely pivoting the strategy. That means we're expanding our strategy, because we see ultimately the big value creator for this project will be the bulk tonnage, where we see the potential to be producing 300,000 ounces a year. But that will take 5-6 years.
Yeah.
But
But that potential is not going away
No.
just because you're going to start making tens of millions of dollars in gold.
And we're not going to ignore either. We'll continue to drill that.
Yeah.
We'll continue to advance that. We want to continue to make it bigger. We see the potential for 5 million ounces on the bulk tonnage. But now we have a high grade where we see for minimal capex, we can get to a cash flow that could put us in a position to then self-fund not only the expansion and the development of the high grade, but also the expansion and the development of the bulk tonnage in the north.
We're talking about $5,000 gold and how that changes everything. For your existing deposit, does that have the potential to increase the resource with lower cutoffs and the like?
Absolutely. So that's a great question. So the resource that we have, I mentioned 2.3 million ounces that combine at 1.01 grams per ton combined, with 91% of the ounces within 150 meters from surface. That's done at the $2,400 gold price. So
You're right.
we're more than double that price. And also that resource is computed using a 0.4 grams per ton cutoff.
Right.
When you drop that to 0.3 grams per ton cutoff, which is a small decrease in the cutoff, the combined resource goes up to 2.6 million ounces.
Right.
So
I would argue you could go down to 0.2 and something like that.
yeah, and we're already seeing people looking at a 0.15 or 0.1.
Yeah.
So it's we have big potential. What's exciting is the impact that the gold prices in the cutoff grade could have on the size of the resource, but also the fact that the resource is only constrained by drilling. So there's a lot of room. We really haven't found the edges of the system, laterally or at depth.
Well, that's true, but I am, as a shareholder, I'm even more excited about the potential of the overall property. I mean, you have potential analogs that you're finding and drilling now, and targets throughout this huge property that you haven't even touched with a drill yet.
That's right. So, I mean, just immediately the area surrounding Torres, we see potential for 3 million ounces or more. Who knows? It has a potential, even maybe the 5 million ounces could be just at Torres. Just 2.5 kilometers south of Torres, along a 15-kilometer trend that includes 5 past producing mines and several gold showings at surface. We have the New Coast target, where we have now 20 drill holes as an operator. all of them mineralized. We see similar widths and similar grades to Taurus, and we believe New Coast alone could be another Taurus.
Yeah.
And that's just 2 targets out of, we have several other targets surrounding Taurus. We have Snow Creek, we have Roque, we have Lucky.
And still just a small fraction of that huge property.
Most of the land, we only properly explored 0.2% of the land package. Taurus occupies just over 1 square kilometer of 600. And most of the property hasn't even seen boots on the ground.
What are the catalysts we see coming up now?
So coming up in the next few months, we have metallurgical studies coming for Taurus. A PEA will be a maiden PEA coming from Taurus.
That's going to be a big catalyst.
Yeah, and I think a lot of people are excited to see not only the PEA with the conservative numbers, which typically have 2 or 3 year trailing gold prices, but the analysis on the spot
price. Yeah, that'll be remarkable.
So I'm quite excited to see that too. In the meantime, we're looking to drill 10 to 20,000 meters. We're probably going to split 50-50 on the bulk tonnage targets in the north, driving expansion and discovery, proving the ultimate, or trying to continue to prove the potential at the bulk tonnage, but also to continue to drill the high-grade underground veins. All the past-producing underground veins, we have drilled them off. We have extended them. They remain open. So there's a lot of room to continue to extend those veins, and each of these veins can carry 150,000 ounces or more at grades between 10 and 20 grams per ton, but also potential for new vein discovery, because we have in the south a 9-kilometer strike length that includes the 4 past producing mines, and the periodicity suggests that every 400 to 600 meters there's a potential for a parallel vein system. So there could be dozens of these vein systems in the south. So that's going to be drilling coming off that. We'll open camp in May, and also as we evaluate the possibility of firing up the mill, which we see as probably a development that will take permitting and development will take about 1.5 to 2 years. We'll probably see some news on as we evaluate direct ship or scenarios as well. Even monetizing tailings, we have a couple of tens of thousands of ounces on the tailings. It's a bit lower grade, but right there at surface. So we're evaluating all these opportunities where you can monetize basically money that's on the ground. It's sitting there in the form of gold, real money.
At a $5,000 gold price.
Yeah, exactly.
A lot of catalysts. Marco, thank you so much. I'm excited for what's coming up. It's going to be a new era for Cassiar. Big re-rating coming up, I believe. Very happy as a shareholder. Thank you, sir. Appreciate it.